Greetings everyone, Joseph James here once again with your newsletter brought to you by theschooloftrade.com. Today was November 11th, 2009. Happy Veterans Day to all you vets out there, guys. I want to remind you guys about our YouTube page. That's /School of Trade. Now guys, I want to remind you, please subscribe to our YouTube channel. That way we get every new video. Please rate and comment on this video. And then in the description of this video, if you look right below the video, you'll see a link for our track record. 19 ticks today out of the market, $190 for the day. We took one loss and one win, and because we were able to limit our losses and maximize our gains, we still made $190 today. We'll keep you guys posted as we make our way through the month. The term of the day today is a time-based stop. Now we talked about this a little bit in the trade room this morning. The more exposure we have to the market, the more risk we have as a trader. Now let me ask you guys this. When was the last time you had a 6-tick stop and saw the market go 4 or 5 ticks against you, and then went all the way back up and filled all your targets? When was the last time that happened? Probably never, right? In fact, if you're a conservative trader like I am, you very rarely ever even get that far along, right? You're usually going to take that trade off the table before you fill that stop. Trade when the market's moving, and avoid the market when it's not going anywhere at all. Okay, so if the market's kind of sitting there not doing anything, not much speed of the tape, not much volume, no real direction up or down, we don't want to be trading at that time because we have no real clear idea of where the market's likely to head in the future. So if you find yourself in a situation where you get into a trade and nothing happens, here's what to do if something goes wrong. A time-based stop uses a second interval. For example, we already know that your first target should be quick. If we don't see our first target filled quickly, it should be 5-6 seconds after you get into your trade, if not less. We're going to use a 6-tick stop, 10-second time-based stop. I'm going to get into the market same way I always do. I'm going to place my initial stop at 6 ticks back, right? 6 ticks of risk. After 10 seconds, if the market hasn't hit my first target, or if it hasn't gone into the green, I'm going to flatten my position. It may sound a little bit foolish at first because we're simply using time to tell us when to get out. But the idea behind it is that because we very rarely ever see a market really fill our targets when we see very slow, sluggish price action, if we find ourselves in a situation like that, we need to have some sort of rule, right? How long am I going to let it sit there before the price action speeds up and then goes in one of two directions, either with my trade or against my trade, right? That's the big reason why we use this time-based stop system, is because after a certain amount of time, if the market's not moving your direction, guys, we can't sit there all day and wait for it, because every second that goes by, that's more opportunity for the other side of the market to grab a hold of this and take you and actually fill your stop. So after 10 seconds, we'll then flatten our position if we haven't seen any money being made in the market, or if we haven't seen this thing go into the green yet. A time-based stop will require a trader to get out of the market if they do not see the trade making them money. And as a new trader, we oftentimes stumble over this because we make up excuses, right? We hope and pray. And that, of course, is one of the other benefits of having this time-based stop. It helps avoid the hope and pray aspect of trading, right? I'm going to sit back, I'm going to close my eyes and hope the market goes in my direction. I'm going to pray that the market goes in my direction. So this, of course, takes that out of the picture. It also supports the idea of cutting your losses early. Today was a great example of how, if you know how to cut your losses early, right? We talk about these mental stops, knowing when our rules tell us to get out and not relying on it to fill our stop loss to tell us to get out. Why take a 6-tick stop when I can get out early at 3 or 4 ticks, save that money, and keep on going? It's not going to give you the ability to make excuses or have no idea, right, when to get out of the trade. We'll show you guys a lot more of that, how we use these time-based stops tomorrow morning in our live trade room. Now tomorrow morning, guys, come out and join us tomorrow, 7:45 a.m. we start. Don't forget, guys, tomorrow is a Thursday, so we'll be doing a free webinar at 11:30 Eastern Time. So tomorrow, 11:30, come out and join us for that free webinar tomorrow. And on the way in the room tomorrow, grab a copy of the beginner's course. Great place to start is with the beginner's course. Now, of course, we just got past the Wednesday holiday, so that's not applicable anymore. Let's take a look at some of the trades we took today. Now, of course, today was a holiday, so we didn't expect to see much going on. We spent most of the morning today going over questions and answers and really kind of digging into the rules and the patterns. So if you missed today's market action, guys, you really missed a lot. A lot of great question and answers going on, a lot of new materials covered. So we definitely had a lot of good fun, a lot of education in the room this morning. We actually did see some relatively decent moves this morning in the market. And here, of course, was our first trade today. Now, we really didn't try to look for trades, I'll be honest with you guys. Didn't really expect very much today. But when things did present themselves, we definitely wanted to make sure we were in a position to take it. Now, of course, this was our first of the day here, guys, here on the Crude. Now, 10:45 at this point, guys, we were simply kind of cruising into the lunchtime session. We hadn't seen very much of the U.S. Open, but here at 10:45, 10:46 here on this Crude, you'll notice we started to see, right, a very well-defined downward trend, right? So as price begins to now start moving down, we then look to, of course, trade with this trend. We have this, of course, this red line here, right? This red line, that's, of course, one of our major levels of support and resistance. That's located for me automatically, and that's at 60, right? 79.60. We then, of course, came down, made this swing low here at 51. As you can see here, guys, we make the swing low here, but then, of course, we're going to bounce up and then come right back down. When we trigger below the 51 level there, of course, that's our entry for our breaker short. The actual fill here, guys, below 51 was at 49. We took, of course, a first target of 6 ticks. Now, this is a good example, guys, so we got some good slippage on this one. The initial target should be 4 ticks, but, of course, in this case, we got filled at 6. That was fine by me, of course. 8 ticks there for the second, and, of course, we trailed our stop there, locking in 6, 8, and 7 for a total of 27 ticks there, guys, on that breaker short. 27, 10 bucks a tick. There's your 270 bucks there for that first trade. Now remember, guys, to trade like this on the Crude, all you need is a $4,000 account. Okay, so a $4,000 account, right? All we need, we just made more than 5% in one trade, right? 5% winner in one trade. We also had another move coming down, right? A second move, potential re-entry here. So of course, right, trend was down. We took the first trade, right, below 51s. And then the second trade, right, broke below this red line. That's right, at 79.40. That red line there was at 40. When it broke that red line, it then made this swing low right here. Right, this swing low, of course, at 35. Right, swing low at 35. And now, of course, I was still in this trade at this point, right, so I couldn't take the second one. But if you missed the first one, you definitely had the breaker short for re-entry or initial entry there, guys, as it broke below 35. And once again, as you guys can see, continues down the trend. Another great example, guys, of where some money can be made for the re-entry. If you got the first one, though, good job staying in it. If you guys could stick with it, you took it all the way down. If not, grab the re-entry and make some more money. Let's keep moving. Our second trade, though, was probably a great example today, right? Good example today on our second trade of how important it is to use those mental stops. Now, of course, here in the gold, this was our second trade and actually our final trade of the day today. Again, pretty slow price action. You'll notice, guys, we had the short-term trend was down, right? Short-term trend was down, which of course meant that we were looking for a breaker short or a two-step long. Now you'll see, guys, we have these, right, double bottoms, higher lows. In other words, we start to see signs of exhaustion, right? Signs of exhaustion on the part of the sellers. Now when I start seeing signs of exhaustion, I'm immediately now looking for the next swing high. The next swing high came 13.4, right? Once we broke above that swing high right here, there was our entry. We had momentum, right? Coming down here, momentum was curling up. But then here's what happened. Once I got into that trade, I saw a couple things. Momentum quickly shifted back down. The pace of the tape turned red. And the MACD on my trade management chart went from blue to red as well. So which basically told me to be aware of a potential reversal coming up. So 11.14 here was the entry. We got filled at 13.5. I had to take a mental stop, basically seeing my rules line up, telling me, Joe, you've got to get out of this trade right now. So we pulled the trigger, get out early. And you guys saw me do this right in real time, guys, in the room this morning. We locked up, of course, right, -2 ticks on that mental stop times 4 contracts. There's your -8, so that cost me 80 bucks, right? That one trade could have cost me 24 ticks, right? 6 times 4, but instead it only cost me 8 ticks because of that mental stop. So now, of course, at the end of the day now, rather than giving back all that money, we now have a large portion of it still in our pocket. So a great example, guys, of how it's not so much being able to take trades that make you money, but being able to avoid the trades that will take that money back. And as always, guys, we'll show you guys how we use time-based stops, mental stops, and of course all of our other rules in our live trade room. Come out and join us tomorrow morning at 7:45 a.m. Eastern Time. Guys, we'll give you a free 3-week trial. Come out and join us for free. Grab a copy of the beginner's course on the way to the room tomorrow morning, and please rate and comment on this video. Don't forget, guys, click on that link below this video for a copy of our track record. For lifetime membership, please direct your emails to sales@schooloftrade.com. My name is Joseph James. We'll see you guys tomorrow morning in the live trade room, 7:45 a.m. Eastern Time. Don't miss a tick. Bye-bye for now.